Türkiye Sermaye Piyasaları Kongresi'nden herkese
Good morning from the Turkish Capital Markets Congress. This is the second day organized by the Capital Markets Association for the first time. Welcome to the Capital Markets Congress with the theme Together Again. This is an online congress, and let's remind you once again that for the 2 days, those who follow our congress, those who visit the booth, shall expect some gifts. You can have further information on www.sermayepiyasalarıkongresi.com. And also to all the participants shall receive their certificates. We are gathered here to follow many expert names, both from Turkey and from all around the globe.
Evet efendim, şimdi de sözü
First of all, I would like to say hi again now. I would like to leave the floor to the moderator. I would like to extend my salutations to each and every one of you. For a sustainable world and sustainability, we need sustainable finance and ESG investments. And we're going to be talking about sustainable finance and ESG investments and the global developments in that regard, and especially the investors in that regard. We are going to be handling those matters. The credit rating and ESG scoring are going to be our focus point, and providing data and sustainability reporting. You know, there are many issues that we are going to be handling today within this panel. There are lots of topics that we would like to touch upon. I would like to introduce the panelists first. I would like to start from my left. As a representative of Türkiye İş Bankası, the head of the Department of Sustainability, Derya Sargın Malkoç, welcome. And next to her, we do have Emre Zehir from GCR, Eurasia Rating Incorporation, research expert, and also from Central Registration Authority. And Dr. Ayzer Bilgiç, service manager, she's with us today. In addition to that, we are going to be connecting to two valuable speakers, one of which is Vera Delvoye from BNP Paribas Security Services and strategy leader in asset owner segment, and also the ambassador of sustainability. Good morning. And our other panelist is Dimitri Senik, PwC, Switzerland. He's CFA and FCCA, and the leader of Investor Guarantee Services. Welcome and good morning. If you allow me, we can start with our questions. I would like to ask my question in English, and then I will continue in Turkish later on.
In the sustainability area, it's a hot topic all around the world, also in the capital markets and finance industry. So to learn the recent developments in sustainability and ESG investments in international financial markets, and also to understand the global perspectives, especially from our distinguished panelists, I'd like to start with Vera and Dimitri. Vera, first question to you. Would you please share your various thoughts? What's the importance of ESG for investors and issuers, particularly under the recent regulatory changes in EU? Why investors and issuers should care about ESG? And would you please tell the recent developments in this area? I know that, of course, BNP Paribas is one of the largest, as far as I know, one of the largest 10 banks in the world in terms of assets around $2.5 trillion. And BNP Paribas has been conducting a very informative survey study on asset owners and managers. And this year's result provide interesting results for the stakeholders of capital markets. Would you please also share some major findings of this survey and also the expectations of asset owners and managers, given the fact that the share of the institutional investors and asset managers in the total assets under management and the investments dramatically increased in last 2 decades. So why there is no turning back for them? Yes, Ms. Vera, floor is yours.
Thank you very much. And maybe before going directly to the survey, I would like to start with the different ways of seeing ESG. So we're talking about managing performance and potentially joining United Nations Global Compact Principle Framework, maybe generating also positive impact and keeping in mind the United Nations Sustainability Development Goals, and also managing risks and exposures. So what is important is really to be able to measure them and to report on them, and more basically to be more transparent with the shareholders, with investors, and with other stakeholders. So we saw that COVID crisis basically accelerated efforts to fight global challenges like climate change, like poverty, like biodiversity, and this at all levels, at biosphere, at society, at economy. And we also see significant increase in sustainable investing and ESG. For example, we've seen just in the first quarter of this year, more than 180 billions of inflows into these ESG funds, and also more than 100 funds launched this year only in Europe. And basically this growth is partially explained by the EU Green Deal announced in December 2019, aiming at making European Union more sustainable through investing. And several regulations were implemented and are currently entering into force with 3 main objectives, such as the reorientation of capital towards more sustainable investment, mainstreaming sustainability into risk management, and finally to foster long-term investments and economic growth. So talking about sorry if we can go back on the slides. So talking about sustainable finance disclosure regulation that entered into force on March 10th, this particular regulation brings more transparency and more comparability between different financial products. And more broadly, this regulation talks about integration of ESG into decision-making process, introduces clear classification of products under different articles, whether they implement ESG, whether they promote ESG, or they are considered as sustainable products themselves. Also brings transparency within the risk and impacts that this product generate, and also performance and alignment to EU taxonomy. So once again, why investors should care about ESG? Maybe I think we are all aligned that there is no planet B. And also because last year, 2022, like 2016, was the most warmest year ever recorded, with more than 210 of billions in damages from global natural disasters. And this while we had a global decrease of 7% in global carbon emissions due to lockdowns. So having said that, I think that what is changing in ESG, and happy to share with you the ESG survey that we conducted this year. And it's our third global survey of asset managers and asset owners' attitudes to ESG. The first one was conducted in 2017. And in this year's, we had more than 300 asset managers and asset owners who participated. we aim to see what was the level of adoption, the role ESG played in their organization, and also what is changing. And on this slide, you can see that what actually exceeded our expectation. And the first point is that 22% of our investors, they do already integrate ESG in more than 75% of their portfolios. And this is quite a significant portion. So definitely ESG assets are increasing and are set to grow. So the second point, that the know-how is also spreading. So the role of ESG in organizations is also changing. And whether before it was an expertise sitting in separate investment teams, so now we see that ESG is embedded throughout the organization itself. Approaches to ESG are changing. And we see that historical approaches to ESG, such as different screening, negative, positive, and norm-based screening, ESG integration, and active ownership, are currently being complemented by new approaches, more purpose-driven, such as impact and thematic investing. And what you see on this slide, that definitely 75% of respondents, they said that they do use ESG integration into the decision-making process. So this is a very big change. 38%, they do use thematic investments, so really purpose-driven investments. And 61%, they engage with companies directly to influence their corporate sustainable practices. So really with a strong ambition to generate this impact and performance. So what is remaining challenging is that still, as you can see, 66% of investors, they incorporate ESG in less than 50% of their portfolios. We noticed that approximately 40%, they did public commitment to align their portfolios to net zero targets. And we identified other categories who are explorers and sorry, missed the category. But different categories, those who haven't not yet done the commitment, but really monitoring and investing in a sustainable manner. And also, what is also challenging is definitely the access to data. Data seen as the top second challenge and barrier to wider integration of ESG. And this SFDR regulation seems to be quite challenging to understand and to implement in an efficient manner. So these are the main key findings. If we move to the next slide, please. This is really as I said before, the changing ways, changing investment strategies and the role ESG plays today and in 2 years. And we see that definitely ESG will be increasing within organization in the next 2 years. And on the next slide, we see that asset classes are also changing and evolving. You can see that equities and fixed income are the preferred asset classes, but they are followed by green instruments, by private capital in strategies such as infrastructure, private equity, and real estate. And what is also interesting that we see an increase in passive instruments. So we see ETFs, trackers, and also liquid alternatives. So globally, very positive outcomes from ESG, the role ESG plays, and the way our respondents will operate. If we move to the next slide. So yes, we have the leaders, the explorers, and the observers. And finally, on the next slide, the major outcome from the survey that I really invite you to read more into details. Mm-hmm. So can we go to the next slide? So yes, 4 major topics: SFDR, which is quite a challenging regulation that entered into force, and that the level 2 will be implemented in 2020, next year with the report in 2023. Data is a challenge. the relationship between asset managers and asset owners, which really relies on the capabilities of asset managers to produce and articulate more data of good quality, and also the engagement that we really see that investors, they do engage with portfolio companies, with issuers, and also that net zero really engage on climate topics with the companies to drive this change towards a better future.
Yeah.
Thank you.
Okay, Vera, thank you very much for sharing this information and your insights. In the second round, I'll ask you more to elaborate on the SFDR and the recent developments in the regulatory environment in Europe. It seems that there's significant improvement and progress in terms of integration of the ESG criteria into the business models and investment decision-making process, but still a lot to do on this way, especially for the asset managers. So thank you. I'd like to ask quickly the same questions to the Dimitri with your PwC hat. As the leader of the investor trust services at PwC Switzerland, which the trust is the most precious asset in our lives, I think, especially in the investment world. So would you please also share your views and reflections on these questions I already asked to Vera? Why the importance of ESG for investors and issuers, especially by addressing to the challenges with respect to the aligning ESG investing with fiduciary duties of the pension funds? Yes,
thank you. And thank you very much for inviting me to participate in this panel discussion. So let me, first of all, quickly reflect on the ultimate purpose of ESG investing and why investors should care about ESG. There are two main objectives in this respect. The first one is the allocation of capital to sustainable economic activities. The second one is a consideration of sustainability objectives alongside of financial objectives. And sustainability in this respect means that our investing activities should not have a damaging effect on the future generations on our planet. So this is why investors should care about ESG and sustainability. So let me say something about challenges in that respect. So as you know, the majority of investment flows actually go from investors to the investee companies through intermediaries. And those intermediaries are investment managers. And this makes the situation more complex because the sustainability objectives need to be aligned with financial objectives of investors and investment managers. And those objectives may sometimes be conflicting because investment managers, for example, have a strong incentive to increase their assets under management and also their financial performance. And investors are obviously also concerned about investment performance. So in this complex situation, we are observing such challenges around the sustainable investing as, for example, a lack of transparency of investment products. And this results in a poor comparability. And here we also have a risk of greenwashing as well. And all this leads to the mistrust on the investor side, and obviously also increasing concerns on the side of financial regulators. Let me probably also give you some figures from the survey that our firm, PwC Switzerland, has just conducted among 220 investment funds that claimed to follow ESG-related investment objectives. So we found that 3 out of 4 of those investment funds followed a very broad themed ESG approach without really specifying concrete and specific ESG characteristics, with very little critical reflection methodologies, and mostly no or very little information about controls and monitoring of ESG strategy elements. So those are those transparency challenges. On the top of that, we also have had a lack of standardization of ESG investing. Although this is now improving, and as Vera has elaborated, with the relevant regulation being introduced in the European Union, and obviously with various self-regulatory standardization initiatives. Now, if I talk about the challenge of managing ESG objectives with the fiduciary duties, as you mentioned, Recep. So the challenge here is that the investors not always invest their own money, but often the money entrusted to them by their others. For example, in the case of pension funds, this is the money of the fund's beneficiaries. And here I'm talking from my experience as I am a member of the investment committee of our pension fund, of our firm. So here the ESG investment objectives need to be very carefully aligned with the fiduciary duties of the pension funds. And such fiduciary duties are often defined by regulations. For example, in my country, in Switzerland, such regulatory fiduciary duties of pension funds include ensuring the security of investments, achieving the adequate market investment return, investment risk diversification, adequate liquidity of investments. So all those fiduciary duties, which are more financially driven, need to be balanced and aligned with the ESG and sustainability investment objectives. So overall, sustainability investment decisions need to be taken in a very challenging environment of aligning with financial objectives and fiduciary duties. And because ESG is such a broad area with so many elements that need to be considered, investors need to rely on various sources of information. For example, ESG ratings, ESG scores that are provided by specialized rating providers. And here we have another challenge, because as you know, those ratings and scores have quite a large dispersion, quite low correlation among different providers. So as a result, the same investment may have a very different rating depending on who the rating provider is. Back to you, Recep.
Thank you very much, Dimitri. It seems that, I mean, as you and Vera already stated about the importance of the quality of the data, trustable data, reporting standards, and the greenwashing are the areas, and healthy ESG scoring and the greenwashing are the challenges in front of the sustainable investment. Thank you very much. I'd like to now turn into Turkish to ask my questions to our local panelists here. Thank you so much. Şimdi Türkçe olarak devam.
Now, I'd like to continue in English. Well, Dimitri stated that data and healthy data, reliable data, reporting and reporting standards, greenwashing, he all discussed these important issues. And well, in essence, he said that there has to be, something has to be done in these fields. But well, now let's continue with Mr. Emre Zehir from GCR Eurasia Rating, who is a research specialist. Well, we all know that these issues get hotter and hotter, and it is widely discussed. The importance of ESG is on the rise too, but when it comes to credit ratings, how do you see the role of ESGs, and specifically all the technicalities and the methodologies to determine ESGs and the challenges? What is your take on it? And what does GCR do on this issue, especially when it comes to sustainability scoring? Well, Mr. Recep, thank you. And just like two speakers, dear Vera and Dimitri stated, it is such an important issue right now. And when you think about investing, all the managed assets, and almost 1/3 of it are managed under, well, ESGs. And that is why we need a comprehensive integration in the financial world. The MPRI announced something that says when it comes to credit ratings and ratification, we need a joint action for ESGs. And it was also stated that ESG ratings should be more visible, apparent, and we need a more systematic approach. 28 rating institutions received 170 signatures before presenting this report, let's say. But the role of ESG within the credit risks and credit ratings, that's what they focused on, actually. Well, rating agencies should evaluate all risks, and especially if there's going to be an issuance. And previously, ESG was included in those efforts, but they were rather subjective. Credit rating analysts had their own views and observations, so they would evaluate ESG factors through their own perspective, and that's how would determine a rating. But after this joint step and after this announcement, now we see that ESG ratings are becoming more dominant and appearing on credit ratings. And many credit rating agencies now have published their own methodology, and within the ESG methodologies and the ratings, they all explained what they do. And as JCR, we continue our works on this issue, and I hope that we will announce our own credit rating methodologies and the share and the position of ESGs soon. We will announce positive and negative factors, and we will start publishing our own methodology as soon as possible. Of course, there are some challenges surrounding the ratings and scorings. And one of the most important challenge is to have future projections. Well, thinking of the future cash flow or any possible defaults. Well, if there are any ESG factors that would affect those two, then you have to determine them beforehand, because the environmental factors can change rapidly. Think of how it was 10 years ago. We were not that serious against climate change, but looking at it now, there are major steps being taken on a governmental level. We observed and witnessed all that has been done in Glasgow, and the social expectations are ever changing too, especially thinking of the pandemic and how much of an inequality it brought, the inequality over access to vaccination, supply disruptions, many changes occurred. So you have to be proactive in your management, and it is quite essential for credit ratings. And another thing is that thinking of sectors and countries, well, they have differences on their own, and especially thinking of developed countries and developing countries and the communities. Well, ESGs can be quite different from one country to another. So you have to determine these differences, and you have to determine all the factors to evaluate ESGs. And this is quite an important issue. And on the other hand, looking at ESG methodology, if a rating institution has their own ESG factors and methodologies, then their outcomes might differ as well. We have to know which benchmarks or indicators shall be included, shall be taken into consideration. And it is quite crucial to have healthy outcomes. Just like Dimitri said before, there can be some differences, especially in risk scoring. Score providers, like I said, can publish different outcomes. So I suppose that's the end of my answer for now. All right, Mr. Emre, thank you so much. Yes, we need healthy scoring, and in order to have it, we have to overcome this different methodology issue. And of course, we need healthy data, both in terms of quality and quantity. We need reliable and comparable data to reach healthy outcomes, and we would need a standard for reporting. So at this point, I would like to continue with Ms. Derya Sargın-Malkoç from İşbank Sustainability Unit Manager. Well, İşbank is quite in a quite great position as a green bond issuer, and Ms. Derya is quite experienced in this field. So Ms. Derya, thinking of sustainability reporting ecosystem, what is the latest? What's happening? What is the best practice on reporting, and what are the challenges that you face while reporting?
Teşekkürler. Herkese merhabalar bu vesileyle. Şimdi iklim krizi, pandemi, yeşil dönüşüm gerekliliği derken tüm dünyada iş yapış şekillerinin değiştiği bir dönemden geçiyoruz ve bu süreçte de sürdürülebilirlik gün be gün önem kazanmaya devam ediyor. Değerli katılımcılarımızın çok farklı perspektiflerden belirttikleri gibi aslında finansal performans ve uzun vadeli şirket değerinin belirlenmesinde artık sadece finansal göstergeler değil, çevresel, sosyal ve yönetişim boyutuyla finansal olmayan göstergelerin de denkleme katıldığı bir hesaplama metodolojisine doğru ilerliyor yatırım dünyası. Dolayısıyla paydaşlar ve yatırımcılar nezdinde de sürdürülebilirlik raporlamasının önemi artmış durumda. Öte yandan da sürdürülebilirlik raporlamasında henüz genel geçer bir global standart yerleşmemiş durumdayız. Bu konuda finansal raporlama standartlarının ulaştığı olgunluktan hesap verilebilir, karşılaştırabilirlik ve ölçülebilirlik anlamında o seviyeden biraz uzak bir aşamada henüz ESG raporlaması. Raporlamada tek bir standart yerine farklı standartların mevcut olması da şirketlerin kamuya duyurmak istedikleri daha güçlü yönlerini ön plana çıkaran konuları öne çıkaran metodolojilere yönelmelerine neden oluyor. Bu da elbette yatırımcı algısının bozulmasına sebep olabiliyor. Ayrıca bu durum, yani tek bir standart ya da genel bir çerçevenin belirlenmemiş olması da yatırımcı ve paydaşların raporlama yapan şirketler hakkında karşılaştırılabilir ve ölçülebilir veriye ulaşmasını engellerken bir taraftan da bu konulara emek gösteren şirketlerin, bu konuya önem veren şirketlerin kendi performanslarını ve bulundukları seviyeyi doğru şekilde yansıtamamasına da yol açabiliyor. Burada bir örnek vermek gerekirse mesela Tesla. MSCI'ye göre Tesla sürdürülebilirlik sıralamalarında üst sıralarda yer alıyor. Öte yandan FTSE'de en düşük performans gösteren otomobil üreticileri arasında listeleniyor. Sustainalytics'e baktığımızda Tesla ortalama bir şirket konumunda yer alıyor. Dolayısıyla buna baktığımızda yine raporlama standartlarındaki farklılaşan kriterleri.
When we look at the criteria in terms of reporting, we can say that the criteria is resulting in different outcomes. In terms of sustainability, coming up with common standards, the biggest challenge is to manage non-financial indicators, to make them measurable. You know, it's rather difficult, and it's a new field, new play field. Non-financial indicators, for example, defining equal values or reference values for measurability, it's easy, but when it comes to diversity and inclusion, it's not that easy to define an international standard. Carbon emissions, there might be greenhouse effect. When we look at the companies need technical know-how, and they do have the difficulty in reporting because they lack know-how about carbon emissions. You know, the fact that there is no common standard results in the need of reporting green approach in numeric matter. Therefore, there are various intentions to make it like that. CDP, IRC, SASB, Sustainable Account and Standard Board, they came together and they showed their intention to come up with a standard reporting method, and not only the effect of the companies on social matters, but also the social and environmental matters and their effect on the companies. So mutual effects. This is important because it's comparable and it can be reflected on the value of the company. So it's going to be a standard that will make us more capacity, that will give us more capacity to maneuver. And again, in sustainability field, there are other efforts to come up with a common approach, and IFRS is also upon the demands coming from the public and the related shareholders. Last month in Glasgow, International Sustainability Standard Board was established by IFRS, especially the numeric data that will be used. And there will be a reporting standard in doing so. And as stated by Vera, the reporting directive of non-financial data, taxonomy and Green Deal by the middle of 2022, we are expecting to see a standard. In October 2021, Capital Markets Board announced sustainability principles, and it's expected to prepare a report about the sustainability. And we can say that sustainability standard is becoming standardized in terms of reporting. When we look at those developments, within the last 2 years, what is new? We need to emphasize one thing, like IFRS, like World Economic Forum, umbrella organizations are involved now. Therefore, it's reinforcing the signals of the standards. To sum up, creating a reporting framework is going to increase comparability, and also the efforts, green efforts, are going to be channelized to better directions. And these updated efforts, the reporting standards or Green Deal, the reportings that will leave them behind. So it's going to be a milestone in terms of standardization. Thank you very much. Yeah, it's good news, absolutely. Creating a standard in reporting. Now I'm going to proceed with the second tour. Ayzer Hanım, I will leave the floor to you in the second tour. So please stick to your time. We need to be faster. Vera.
To Vera. Vera, what should we expect regarding the effects of the regulatory changes in this field? Mandatory disclosure on sustainability, for example, in EU recently issued regulation SFDR, Sustainable Finance Disclosure Requirement. What SFDR is bringing to the issuers, publicly traded and maybe privately held companies? And would you please elaborate on the possible impacts or the consequences of such regulatory changes on the capital markets in the future? With your possible suggestions on the issuers and institutional investors in Turkey. Thank you, Vera.
Thank you. So, apart from sustainable finance disclosure regulation that I touched on before, there are actually several regulations that are currently impacting the entire European financial sector ecosystem. So the Sustainable Finance Disclosure Regulation that I said brings additional transparency and comparability between different products. So what is important in this regulation is that it definitely puts ESG data access to qualitative and consistent data at stake, that all the products have to disclose, and this double materiality principle has been introduced on sustainability risks and adverse impacts for all the products, so even for those who do not promote or integrate any ESG risks, and also for those who promote and those who are considered as sustainable products, there should be a disclosure on ESG performance and also alignment with the EU taxonomy. So taxonomy itself also facilitates this sustainable and green assessment of certain economic activities. And finally, what is another regulation that Daria touched on that helps at disclosure and introduces new standards for reporting is the Corporate Sustainability Reporting Directive that will enter into force in January 2023, and that is replacing a non-financial disclosure regulation with a massive change on coverage. So before now we have on the large companies, banks and insurance companies with more than 500 employees who are disclosing different ways they integrate environmental protection, social responsibility and treatment of employees, human rights, anti-corruption, bribery, and also diversity on boards. And what is new that a threshold has been reviewed to 250 employees, and now all listed companies and all smaller companies will be captured. So we're talking about the coverage of 55,000 of companies, and new standards are being proposed and under review today. So we will have this consistency of disclosure, and it will be a great milestone in access to this consistent raw data disclosed at issuer level that will definitely help investors also to take right decision and on the way they integrate ESG into their decision-making process. So knowing that this is happening in Europe, there will be more consistency and standardization. So for the Turkish market, I understand that there is also several initiatives, and maybe it will be also interesting to participate and to share these experiences to see what exactly companies will disclose, how to access to this data, because then it means that wider disclosure will definitely help also different ESG data providers to access and to analyze this data and to propose a wider scope of indicators that will also help investors to take right decisions.
Thank you very much. Very definitely, it will affect Turkish markets, financing industry for sure. As the EU candidate, Turkey and Turkish capital market regulation is already compliant with the EU, and so no doubt that we have to also comply for the to the recent regulatory changes in EU. So Dimitri, at this point, again about the ESG disclosure standards for investment products, especially with your CFA at this time, would you please share the highlights of the ESG disclosure standards for investment products issued recently by CFA Institute with us? To what extent we can expect, I mean, this standards can help companies increase transparency and provide reliable data to the scoring rating companies?
Yes, thank you. So if you look at the current standards landscape in the ESG investment area, then you will see that a majority of those standards either deal with corporate issuer disclosures at the company level, or with ESG investment approaches, or with specific instruments, for example, with green bonds. Up to now, there has been no truly global framework for transparency and disclosure at the level of an investment product, for example, for mutual investment funds. So the purpose of this newly issued global ESG disclosure standards for investment products of CFA Institute is to fill this gap and to become a voluntary global disclosure framework to provide transparency and comparability at the investment product level. So Vera has talked about the EU regulations and the EU Sustainable Finance Discussion. specifically. So that regulation obviously also deals with the investment product level disclosures. But this is a regional framework, and this is a legislation. So the CFA Institute standards are an industry self-regulation and are a global framework. So those standards seek to mitigate greenwashing, to provide transparency about the ESG approaches used in investment products by standardizing the information that is disclosed in the investment products, a consideration of ESG issues, for example, in relation to investment objectives, investment process, or stewardship activities. Yeah. And those standards are designed to accommodate the full range of investment vehicles, asset classes, and ESG approaches offered in the markets around the world. Yeah. So the CFA standards deliberately do not deal with naming, labeling, or classifying investment products. And they do not provide any criteria about what is and what is not an ESG or sustainable investment product. They only provide for transparent presentation and disclosure of the ESG features of investment products. So practically, these standards of CFA Institute can be applied by investment managers to any specific ESG investment product, for example, to an investment mutual fund, by preparing an ESG disclosure statement that would transparently describe the ESG characteristics of the investment product using the disclosure requirements of those standards. Back to you, Recep.
Dimitri, thank you very much. Very promising, I think. Thanks to the contribution of CFA Institute as well. So I'd like to turn into Turkish again.
Now let me continue in Turkish, and I want to ask my question to Mr. Emre on our second round. Well, we just followed Vera, Daria, and Dimitri, and we heard a great Tesla as example. Different providers come up with different scorings and outcomes, but how are we going to trust in those different notes and ratings, and what can we do, or what should rating agencies do to overcome these different outcomes? What is your take on this? Well, thank you, Mr. Recep. Just like Daria and Dimitri said, and you also emphasized it once again, well, we need a common understanding and agreement on the definition of ESG. So that is why scores are so different. Why? Because the agencies go for different methodologies. Well, it's that simple. And as far as I remember, there are more than 70 ESG data providers, and each and every one of them have their own unique methodologies. So such differences, of course, affect scoring and their comparability, because the difference is huge sometimes. Think of some specific companies. Their scoring is so different. I mean, and sometimes their correlation is great, and sometimes you see negative outcomes, and you will see a negative correlation. So that is why we need a reassessment of all the methodologies, and ESG scoring provided to investors shall be evaluated by the investors, of course, within the framework of their own sensitivity and what they look for. So this might be a solution for investors. But thinking of credit rating, well, credit rating, again, appears to have different methodologies. Sectors can differ from one another. For example, in some sectors, there might be a generalized methodology so that, you know, all sectors can benefit from it, but then this might bring about measurement errors and mistakes. So sectors and subsectors, I believe we need different methodologies. And later on, we might even have country-specific methodologies so that maybe we can overcome these score differences. Well, thank you, Ms. Daria, through the eyes of an issuer. And within the framework of EU compatibility and meeting the expectations of the investors, how do you see the challenges and all those huge differentiations in scoring, plus the greenwashing issue? And what would you recommend to mitigate such differentiations? Can we have independent third parties? do you think that would be a solution for this? And I'm so interested to hear what you say about it. Well, greenwashing is one of the most challenging issue, and ESG reporting continue its path with enlarging its scope and popularity in Turkey too. But let me touch on 3 things here. One, we need data. And the data that we will come across in reports need a framework and a classification, and we lack it. We lack classification. So evaluating reports as products, we need comparability. Yes, US taxonomy, EU taxonomy, they come up with definitions for specific issues like what is green or what is an SCG, but we need a joint definition so that we can eliminate all misunderstandings, and it'll pave the way to reach a global standardization in this regard. And another issue with ESG reporting is that we need a comprehensive ESG reporting. And if you want to achieve such a thing, then it is crucial for you to see the numerification of climate change related risks. This is so important, and this is something non-financial. So you have to think outside the box. You have to leave the traditional approaches behind to overcome these current issues. And evaluating banks specifically, well, on one side, you try to have risk management, and then on the other hand, you need new goggles on to understand the issues, which is climate-related risks. And thinking of our customers, well, if you want to manage climate-related risks, then the demands coming from our customers and investors are changing, because we are facing risks and threats that cannot be measured with conventional methods. And I believe this is something that the entire business world needs to prepare itself, and we need a national database so that we can have access to much needed data, and this will help us reach a global standard perhaps. And you suggested a third party involvement. Yes, they might contribute too, because it'll bring about an independent reliability too. But this is something quite new. As İşbank, we follow more than 70 indicators that fits in ESGs, and we receive independent inspections and audits. And to be honest, this gives us a freedom and great benefit to make the most out of the data that we collected. And that's all from me.
Dimitri, you like to make additional point about this, the problems or biases of ESG scores ratings, your suggestions. If you like to add something in a minute, please feel free to.
Yeah, well, I think there are several solutions to this problem. So obviously you can obtain ESG ratings and scores from several providers and evaluate them using your own research and judgment. But this option can be quite expensive and difficult to implement, especially for smaller asset managers or investors. Another option could be to use a consensus-based analytical approach. So you would collect and consolidate the ESG rating data from various sources, including, for example, sustainable exchange-traded funds, but also active asset managers. And there are such tools that provide such solutions. So in our pension fund, we've actually made a very good experience with one of such tools provided by a Swiss-based company. And yeah, so that could be another option.
Thank you, Dimitri. Thank you. Now, şimdi ben...
All right, I'll continue in Turkish again. And now I'll leave the floor to Fatma Birgiç from CSD of Turkey, Investor and Corporate Governance Services Director Service Manager. Well, as the CSD, I want to ask you, the ESG, you take active role in supporting ESG, but making things public, having a standard, improving it, enhancing it. These are all crucial, but what is the role of CSD? What are your future plans on this issue?
Organizasyonda emeği geçen herkese teşekkürlerimi iletiyorum. Thank you very much. We all know sustainability and sustainable finance, and as individuals and as a society, our sensitivity to public events has increased. The concept of sustainability, when we look at them in this process, we can say that there are 3 steps: externalization, objectification, and internalization. The first one is the concept, it has been put on the agenda, and from stagnant to movement and creating awareness. And the second one is the objectification, definition, discussion, making it concrete. Why do we care the sustainability? When the concept has become concrete, then there is a need to measure it. And third step is internalization, the adaptation of this practice, expanding it, repetitively implemented comprehensive analysis, and they become a part of decision-making processes. In Istanbul Stock Exchange, we do have 425 companies, and 59 of them are within the sustainability index. Only 14% of the companies have taken long strides in terms of sustainability. The fundamental functions of capital markets, they do have a function of corporatization of the companies as well. And there are regulations to inform the public as well, decreasing the asymmetric information, creating an efficient market, creating healthy price, and as a side responsibility, follow-up of the investors' right, and also creating awareness and contributing to the companies. And when we look at that, this is the public information system. CSD is developing it. The traded companies, firstly, they need to disclose their information in the website, and the whole Turkey and the rest of the world can have an access to that. There are 95 notifications in CAP system, and it's a huge amount of data. Therefore, at this very point, as stated by the other participants, this data and distributing it to the users, it's not enough. This data needs to be analyzed, and this data has to be a qualified data, comparable data, even auditable data. And in the CAP system, we call it XPL. It is a taxonomy structure, classification structure. As the regulatory authority, what have we done in terms of sustainability reporting? In 2018, as CAP team, we prepared 2 drafts, sustainability report and integrated report. It was on the voluntary basis, and both the investors and the companies, we want to inform them and increase their awareness, and we wanted to create an easy access to these reports. In October 2020, Capital Markets Board added sustainability principles, adaptation framework, and they made it compulsory to make sustainability report, and our companies announced it for the first time in 2021. And when we look at the number of the companies who made announcements, who disclosed their sustainability data. You can see here the numbers, 55 companies along with the activity report. They made their explanations in terms of sustainability as well. In November, green dating device and also leasing certificate guidance draft. And when we look at the green dating instrument issues, when we look at them, they need to be in standard with the international markets. They need to be contributing to environmental sustainability. And in the first quarter, as CDS, this data is going to be comparable and this data analyzed, and we are going to be adopting our infrastructure in that regard. Another important matter that's worth mentioning is that in the activity reports, that that text needs to be having a structure which can be analyzed. In March, we had taxonomy effort in March, and we shared it with Capital Markets Board. And in a joint working group, we asked to come together and discuss it. In the days to come, the number of reports about sustainability is increasing. And as they increase, their measurability, their comparability, their audit of consistency, it's going to be important. And within that scope, we do have some instruments that we can use. Our own rules, or by making use of international metrics, we need to be defining our own rules by defining Turkey unique metrics, and we need to be measuring the company's position according to these metrics. So it's possible to create drafts in that regard. Third parties, independent audit companies or consultancy companies, electronically within the CAP system, they approve these reports and they can give their opinions on the sustainability reports. In de facto financial reports, we already do that. These processes will be adapted to sustainability situation announcement as well. The financial literacy of the investors needs to increase because they should differentiate the realities and in the reports. And we do have a data analysis platform online, and along with the increase of the number of the reports within the scope of sustainability, more comprehensive, more detailed statistical data are going to be provided, and we are going to be supporting both the investors and the academicians. Thank you very much. Thank you very much. We are out of time. Thank you very much. I hope that this session and this panel was fruitful for each and every one of you. We have one quick question.
ESG investments differ in terms of financing opportunities according to developing country practices. Dimitri, this question is for you.
Could you please repeat the question?
Should ESG investments differ in terms of financing opportunities according to developing country practices?
So I'm not sure I understood the question.
I think trying to emphasize the financing cost differences in the ESG investments.
Well, so I mean, in terms of costs, there are different issues here. So if you talk about costs of investment management, if you implement an ESG investment strategy, then this is an active strategy, and then obviously you need to expect higher costs because of that, on the side of the investment manager. Speaking about financing specific sustainable related projects or initiatives directly, I think this is a very complex question, and I'm not sure, Vera, if you have any opinion on that. But if you look at, for example, at these prices of green bonds or similar instruments that really dedicated to the sustainable activities, then I think that there are pricing differences that might have a very different cost structure, you know, for the investments as well.
Yeah, I think that's enough at this point. Thank you very much once again for your participation from Switzerland and France. Panelistlerimize, Türkiye Sermaye Piyasası Birliği'ne yöneticiler.
I'd like to thank all panelists for their great contribution and for their support to make this Congress a reality. We appreciate your insights and wish you a great day. Thank you.
Thank you.
Thank you.